Morgan Stanley's Adam Jonas just dropped a wide-ranging note explaining how and why Tesla stock behaves the way it does. They expect a tough year for the core auto business and perhaps even Tesla's operating margins. But, and this is a big but, they note that since Tesla is not just an auto company, there will be many headwinds helping grow the stock. Today, we're going to discuss their views on Optimus, Dojo, Edge AI, the EV infrastructure, and even SpaceX halo effect. Despite all this, they give the stock a buy with a price target of $380. We got Hans Nelson with us, and he's got his own YouTube channel called Hans C. Nelson. Thank you, Hans.
Yep, excited to be here.
Yeah, Morgan Stanley, Adam Jonas, regularly he drops notes, and he's one of the people that is very bullish about Tesla. And so this is what he said. First of all, he describes 2024 for Tesla. It's going to be another volatile, idiosyncratic year. So that doesn't sound good. It sounds like it's going to be very volatile. And he'll explain why he thinks that that's the case. But so basically, he starts off his note saying that, look, it's quite it's easy to understand why auto investors are cautious, right? Because there's going to be increased competition, okay, a lack of high volume new products in 2024. But you got to look at Tesla's not just an auto company. So in their view, it's more than an auto company. In our opinion, Tesla's definitely an auto company, but it's also an AI company. Think and, not or. They're both an AI company and an auto company. This is very interesting, this point. I wanted to get your thoughts on this. He said, for example, of how Tesla's share price can disconnect from the auto narrative. Look no further than the past 12 months. If 12 months ago, I told you that Tesla's fiscal year 24 forward consensus earnings per share estimates would be revised down by nearly 50% because of the price cuts, would you have predicted the stock would nearly double, which is what it did from January to now? No. Well, that's because that's what happened, and there's something else driving the stock. What do you think happened?
So, I agree with the larger point, but I would say that the biggest portion of that difference has to do with the macro. Like, if you look at Tesla as an isolated company and that's the only thing that exists, sure, that doesn't necessarily make sense. But when you put it in the context of the macro economy, and we're in a completely different economic outlook right now than we were at the beginning of the year, then it makes a lot more sense. And so I would say he's, kind of underweighting the importance of the overall macro economy in that rise in his somewhat more myopic look at Tesla as a company and their financials and, the performance of the stock price right now. That said, I would agree that, it's incredibly important that people begin to recognize more and more the importance of a lot of the other business opportunities that Tesla has ahead of it besides just auto. And, that's the point of his little piece there that I agree with, is that he's saying, the overall performance of the stock can be somewhat disconnected from just the performance of the auto industry because Tesla is a lot more than just an auto company. And that's 100% correct.
Okay. And then this is 2024. Looking ahead, okay, they are expecting another challenging year for the core auto business. And in fact, they goes, we would not rule out the potential for Tesla's gross auto margin to test 10%. What is it now? 16%? It can even fall to 10%, or the core operating margin to flip to negative for a quarter in the year ahead. So that's a potential for that to happen, they're saying. But all else equal, continued negative surprises on the auto side should be negative for the stock. But because Tesla is an auto company, but then they're saying, but as we learned with Tesla over our years of coverage, all else is rarely equal because Tesla's not just an auto company. What do you think? This is kind of like the worst case scenario. Gross auto margin could fall to 10%.
So, I don't see there being margin pressure from any further price decreases. I think the launch of the Cybertruck does create a demand halo now that will help to actually drive higher pricing moving forward throughout 2024 rather than lower pricing. Obviously, they're continuing to make continued progress on just efficiencies in the manufacturing process and better overall structural COGS. And so both of those things should be positive signs for gross margins. The one thing that we do have to look at is the impact of the Cybertruck ramp on overall margins. Given the size of Tesla's manufacturing operation, I wouldn't be I would be very surprised to see Cybertruck be able to have that significant of an impact on the overall auto gross margins. So I think that that 10% number, while maybe hypothetically possible, is extremely, extremely unlikely. And so
Yeah.
I think it's much more likely that moving into the rest of this year, we actually see increasing margins and increasing volume, both of which will be positive signs for the share price.
And I agree with you there. I think that's more likely to happen is increasing margins. But this, they obviously said this is an auto company. It's going to go do its thing, but it's not an auto company. So let's talk about the areas that they're bullish about Tesla stock in 2024 because it's not an auto company. Let's get started with the first one, which is Optimus, the Tesla bot. So they're now expecting that the AI Day 3 will happen on the first half of 2024. There's a question mark. They think that's going to be an important catalyst to introduce and develop new adjacencies for Tesla's technologies. Optimus addresses the $30 trillion global labor market and runs on the same software architecture as FSD. So the Tesla bot, as we saw with the Gen 2 demo reveal that happened a week and a half ago, it was very impressive. But when Tesla AI Day comes on, if Tesla is able to show some major improvement in the bot, what I noticed was they dropped the demo showing kind of the demo of the hardware and its ability to walk. Then they dropped the demo showing its intelligence, the ability to now learn on the fly, recognize its positioning, and then be able to move blocks and then just figure it out on its own by feeding it with just video. Then they dropped the demo of Gen 2, which is again the physical development. The hand dexterity is now fluid. It's got the fingertip sensors now. It can walk 30% faster, those kind of things. AI Day 3 is going to show you the brains. They're going to show you the intelligence. And if they shock with both the intelligence improved to the point that we believe, Scott Walter, who's an expert in robots, was looking at this and he believes that the hardware now is basically at the level where it's ready to go, if it's very close to going beyond prototype and into production or limited production anyways for the first 1,000 or so. Because it's all there, right? It's all very slim and ready to go. If they show that the intelligence is there, it could shock. What's your expectations?
Absolutely. I mean, just look at the progress of artificial intelligence, deep learning over the last 12 months. It's been ridiculous. And one of the things that we learned, obviously, and we've spoken about here on the channel, was the way that they showed us at the CVPR conference that they are adapting the exact same training and model architecture learnings that have been developed in large language models over the last year to these real world AI problems. They've got creative solutions, and they're the first ones really trying to figure out how to apply those to embodied physical real world applications. And they're on the forefront of that work. So not only do they have this incredible physical instantiation of the robot, all of the servos, all the actuators, the very ready for mass production design of all of the total body of the bot is really all ready. And that brain piece is the last and most difficult piece to solve. And so I'm excited to see what it is that they have to share with us and when they do that. I think that I agree with Adam here actually on the timing that probably roughly a year. So, at shareholder day, they presented master plan part 3, and that was laying out the future of both the automotive and the energy sector primarily. And that's the accomplishment of the mission to transition the world to a sustainable energy future. The Optimus is really, something that goes beyond what was ever in a master plan. It obviously contributes to a lot of those efforts in a number of ways, but it's really an evolution of really society as we know it beyond just having normal humans doing normal things. And now we're just using sustainable energy to do all of that. And so it makes sense to me to kind of have a follow on to shareholder day that really lays out the vision of what that can be and what their progress is. And, doing that within a year of shareholder day, I think makes a lot of sense.
So the next topic that they talk about is Dojo, which is a bit surprising to me because, for an institutional analyst to start talking about Dojo as potential catalyst for 2024, we got to talk about that, see if you think that that's the case. Many people are still saying Dojo's a long ways away. So they say the same forces that have driven AWS to reach 70% of Amazon's total earnings can work at Tesla, in our view, opening up a new addressable markets that extend well beyond just selling vehicles at a fixed price. The catalyst Dojo, Tesla's custom supercomputing effort in the works for the past 5 years. Recent management departures from Tesla's AI team have grabbed headlines. What milestones can show Dojo contributing to Tesla in a positive way in 2024? So like I say, they mentioned this. And this is a question. I don't think that they're making a statement that's going to happen, but it's a potential. What milestones can show Dojo contributing to Tesla in a positive way in 2024, despite the recent management departures? What's your reaction to that?
I actually want to start up there where, I think the reason, because you asked the question before this started, why is an institutional investor identifying Dojo as an opportunity? And I think the reason for that is because they have this reasoning by analogy example of Amazon, that they've seen this work in the past. And so they're looking, hey, is this something that we can also tell a similar story about Tesla? And is that going to be something that works? Then to come back down to the lower portion and ask, what milestones can Dojo contributing to Tesla, or can they show in a positive way in 2024? Really, Tesla laid out, they want that 100 exaflops of total compute, and they wanted it by the end of 2024. And so if they can show that a significant portion, percentage-wise, of those 100 exaflops are actually fulfilled with Dojo chips instead of just continuing to grow their overall NVIDIA cluster, which is, one of the primary ways that their overall compute has been growing to date, that will be one of those signals. The other would be actually showing us at AI Day 2 the design for Dojo V2, which will be a much more generalized artificial intelligence cloud computing platform that is not optimized for purely video training data the way that Dojo V1 was. So I would say that both of those things could be huge. And then we need to see some sort of progress on the software compatibility so that existing software and training architectures can basically be dropped into running on Dojo in a low effort. I'm not going to say a seamless transition from being, to where you could run the same thing on Dojo that you would normally be able to run on an NVIDIA based cluster. But it needs to be a low effort to perform that switch. If Tesla can accomplish all three of those things in 2024 or even 2025, those are massive, and you do need all three of them. So you can't just have one or the other, but they are kind of married together. If we get all three of those, that signals huge implications moving forward for Tesla's ability not only to capitalize on just incredible in-house expertise in developing AI applications, to then being a very competitive player in the overall landscape of the deployment of AI across all companies in the entire market.
Okay. Yeah, so for Dojo as a service, which means that they're going to, Tesla's going to sell Dojo to other commercial parties, just like AWS, Amazon sells AWS to small businesses and corporations. In order for that to happen, they need to, have enough Dojo compute to be able to share more than just what they need themselves, Tesla needs themselves. Having said that, I think in another show, we pointed out that in the career pages for Tesla, they actually had a line under the Dojo section saying that they're looking for developing APIs for Dojo to be able to enable, release it to the world, letting other companies be able to have access to Dojo. So that was a signal that Dojo's service is actually something they're working on now. Great points. We'll see what happens there. Not yet sure that Dojo will, impact the stock in 2024, but boy, that would be a huge surprise if it does. Okay, this next part here, I have no idea what they're talking about, Hans. Honestly, this is weird. I would not know what they're talking about, okay? They're talking about edge AI, So they go next generation software defined vehicles. Software defined vehicles may blur the lines between the automobile and the mobile device market. Okay. Can a car key do more than just open a door? What car key? My phone? Can a part of the car stay with you? Tesla vehicles are robotized edge computers. Could there be room for a cyberphone at the edge of the edge? Okay, here's what I thought that they meant, which is every one of our Teslas has a computer in it. It's got a chip in it. And so now you can extend beyond Dojo, which is a supercomputer. You can give access to all of our cars' compute power. And now you have distributed computing. And then, you as a Tesla owner could make some money by renting out, access to your compute, because when you're just sitting there in your garage, I get that part. This part here, what are they talking about? Can you, a mobile phone, cyberphone, what?
Yeah, it's hard to get inside their mind here. One of the things that I would speculate, there's lots of people are super excited about the idea of Elon making some sort of a phone through one of the companies. Usually that ends up being Tesla. And so,
He's not going to do
we
it.
continuously
Okay.
hear, I know, I think it's the dumbest idea in the history
Yes.
of dumb ideas. And people will be very offended that I called their pet idea dumb. But it's just the fact that creating a phone does not move the mission forward in a transition to sustainable energy. And we don't need any compute from Tesla that's outside of the vehicle or the bot, or whatever Dojo is providing as a service. But what I'm assuming his idea here is that you do have essentially a high performance computing device in your car, and that
Right.
maybe Tesla's going to make some sort of wearable device or phone that that person can take with them that is connected seamlessly to the supercomputer in the car, which can do fun, interesting, and amazing things. I don't think that's something that's going to happen, but I think that's maybe what Adam Jonas is driving at as a possibility here. And I mean, if you look far enough into the future, maybe some of those things really start to be possible. But this is definitely not something that we need to be talking about in 2024.
Yeah. I mean, they're going to install Grok into the cars. So I can see that part, right? So right now I pull up my phone and I ask questions, like let's say Google searches. I ask questions about, locations I'm headed towards. I have questions. Now, if I've got my car, I can see myself treating it like a computer, right? So, I'm just curious, how far away is the sun from the moon? And I'll just ask the car. I'll ask Grok and he'll answer because he's right there and I'm talking to him. So I can see that part, right? I'm using my car like as if I was my mobile phone. But yeah, okay. I mean, all right. So again, this is part of 2024, catalyst potentially for 2024, which feels odd. Okay, that this will even happen or anybody's going to talk about edge AI in 2024. We'll see. And I'm the bull. I'm a bull. Okay, so now let's get to some really fun, basic stuff. EV infrastructure. Does Tesla scale in EVs puts it in the pole position for industrializing manufacturing standards and supply chain architecture required to commercialize EVs at lower prices while mitigating national security risk. What? Okay. The Corpus
So I think
Christi
that's just
lithium.
domesticating, supply chain there is what he's saying, that,
Okay, gotcha.
as long as we're not dependent on China for all these important things that we need to do, whether it's from chips or whether it's from raw material supply.
Okay, understood that part. Thank you. Corpus Christi lithium refining operation should continue to ramp throughout 2024. Last May, Ford adopted Tesla's charging standard. A dozen other OEMs followed suit. Traditional OEMs pull back on their in-house vertically integrated EV plans. We believe Tesla's in a position to add even greater value to industry rivals, basically licensing, software, FSD, battery, hardware, operating systems, 48-volt electric architecture in other areas. This part we all agree. So again, I'm not sure. I guess he calls it EV infrastructure. Basically, with the OEMs pulling back, there's going to be partnerships, and it's going to be partnerships in any of these areas he listed down below. That's going to happen. I mean, this is going to be the year of more partnerships. Not just, I've been saying, supercharger partnerships like Lowe's and Home Depot and McDonald's going to partner with Tesla. It's going to be all these other OEMs.
Thoughts? Yeah, I 100% agree. And I think that, the 48-volt architecture and the steer-by-wire, that both of those things are also things that it'll be exciting to see the first time that, because Tesla's working with some suppliers, and those probably tier ones, I would assume, are going to be able to supply those technologies to other companies. And so it's going to be fun to see who the first other auto manufacturer is to adopt those into vehicles, because one of the things that that signals is the ability of those suppliers to ramp up those components, which we want to see those components ramping up so that we can have high confidence in their ability to supply not only other auto manufacturers, but to supply an incredible ramp of next gen vehicle platform, which will definitely use 48-volt architecture and steer by wire.
Yeah. Okay, that's for sure going to happen. We should spend way more time talking about that than these other points. So this is another interesting one. The SpaceX Starlink halo effect. I've had people tell me, I'm not one that 100% believes this, that whenever SpaceX does a flight or something really important, it has a halo effect. So people will buy Tesla stock. They will view Tesla better because they feel they're all part of the economy. So here's what Adam Jonas says from Morgan Stanley. From our discussions with investors about Tesla, the subject of SpaceX and specifically Starlink are seen as important components within the economy and ones that are potentially interrelated with Tesla itself. So now they start talking about Internet of Cars, and the supporting compute will rely on a redundant, resilient communications mesh network. Starlink is commercializing an all-new communication network. So I guess they're talking about putting Starlink in every one of the cars. The cars will be able to speak to itself. So there's 2 points here. One is this idea that if SpaceX or Starlink continue to, grab headlines, does that improve the number of people who buy Tesla stock? And two, is there some sort of, partnership between SpaceX and Starlink and Tesla?
Yeah, so there's a couple of interesting points that, one of them being that Starlink is going to, just as it continues to grow, it's the best option for providing internet to rural locations. And so you think about that customer segment um, being introduced to an Elon Musk company and an Elon Musk product, and not only enjoying it, but like satellite internet out in the middle of nowhere, other than Starlink, really, really sucks. It's hard for people that live on, ranches in the middle of Montana or, out in Eastern Oregon, Idaho, Utah, some of these places where there's large areas of land with very few people on them and there's very little internet infrastructure in those locations. Um, they, to be able to participate in modern life with high speed internet is an incredible win for them. And so to be able to receive, basically internet service that's the same quality as you could get downtown in a major city out in the middle of nowhere, that's a big deal. And so if they're getting that from a Musk company, I think that opens their mind up to other things that he's doing in a way that just hearing about it is not going to. And so that's cool, you know, added customer segment there that will have a positive impression of Tesla and of Elon. But I think one of the things that they're talking about more is that investors are, I think investors know that SpaceX is going to be printing money and they're excited about it. And so I think the fact that they're basically relating that in their mind to saying, hey, Tesla seems like the performance in the stock price since 2020 hasn't been what we've wanted, but we do see that these other areas of Elon's businesses are just cash printing machines. I think from, the clientele that Adam Jonas is talking to, that is something that makes a difference in their mind. And then moving to the end of what are the opportunities that opens up? Elon has talked about the fact that we could potentially see use cases in the future of having the FSD computers in a vehicle be able to participate in some sort of AI training infrastructure and for vehicle owners to earn some money based on that. If they're going to do that, you actually have to have a very high quality network connection in order to coordinate those jobs. And so you have to be able to get data to and from the vehicles and facilitate the compute that happens on that FSD computer well. And so you have to have great connectivity. And so that's one of the things that I don't know how you accomplish that business use case without having something like Starlink and direct connections to each and every vehicle, high quality, low latency, high throughput. And so I think that's, one of the things that is important in the overall business use case, that really it depends on, but like there's no other company that's going to be able to provide that connection, and so it has to be something that's done by SpaceX.
Well, I will say this, it's great to see an institutional investor talk about all of these potentials and write about it. And then more and more other analysts will realize that these are going to become real. Let's get back to the fun part, which is what percentage of the stock price does Morgan Stanley attribute to the core auto business and the others? So he says, in our opinion, Tesla's far more than an auto company. Good. Of our $380 price target, our valuation of the core auto business is $86 per share. 77% of our target derived by network services, mobility, third-party battery, FSD licensing, energy, and insurance. We receive significant pushback from our clients for including non-auto revenue streams in our valuation. Our overweight thesis is highly dependent upon these business lines becoming far greater drivers of earnings with clear milestones, proof points backed by accompanying financial disclosure. Again, this is the fun part because here's an institutional analyst who's starting to put in FSD. Now, in this case, it's FSD licensing and other components that it's not yet fully out there with full, revenue streams. This is a good sign because they're understanding Tesla is not about a company you wait for the revenue to flow and then calculate it. You need to, basically do a probabilities.
Yeah. I mean, it's interesting since we just talked about the Dan Ives interview, and he sees a lot of potential upside for the company just in auto, whereas here we're looking at Adam Jonas's analysis. He doesn't see, in fact, he doesn't see upside. He sees downside if Tesla were just an auto company. But that being said, it's exciting to see him put so much weight in so many of the other areas of the business. And I think that history will remember him well, for being willing to put his reputation and his analysis on the line to make kind of these more bold, somewhat less proven predictions. One of the things that I've said for a number of years is that auto is to Tesla what books were to Amazon. And so you can see Tesla building up expertise in a number of critical areas. One of those is going to be manufacturing. And if you want to be one of the biggest companies in the world, you have to actually be able to make physical products. But not only do you need to make physical products, you need to actually have the integrated software that makes those products extremely intelligent and useful. Check. So they have both of those pieces in play. And then, the other thing that you have to have is not only high quality software that's traditional, say, software 1.0 code, but you now need to become an artificial intelligence leading company so that you can stay at the forefront of software development in the future. And so they are an incredible software company with incredible manufacturing prowess who is at the leading edge of AI. And between the three of those things, and then adding in their ability to use batteries and push the envelope on renewable energy and the ability to use electricity gathered directly from the sun, put in solar panels and stored then in batteries, and then use that technology. They are at the forefront of the supply chain for actually being able to make these renewable energy powered, battery powered products as well. And so, all of those things together, there's so many different ways that those technologies can be combined together to make products that alter the world and solve real problems for real people at previously unforeseen scales. And you can begin to figure out how to solve all those problems in the auto business. But once you have figured out those core competencies, they translate into a number of other market opportunities. And so that's what you see, Adam Jonas recognizing here is that their ability in software, their ability in making, being able to provide high quality batteries at low cost, at large scale, those types of things, licensing software, creating the Optimus bot, that all of these things are going to dwarf just the auto business in the long term. Just like Amazon went on to complete, like almost all of Amazon's revenue comes from things other than books in the long run. And yeah, the same thing will be the case for Tesla as well when we hit 2030, 2035, 2040. Um, and because we're talking about products that are much more difficult to make, and they require a lot more materials, the overall life cycle of Tesla getting to the place that Amazon is now, it's going to take longer because we're making thousands of pound vehicles that you have to source all those materials and figure out how to put them together. Like that's a product that's much more difficult to make than a book. And so while the overall game plan is very similar to an Amazon, the time scale over which it occurs is going to be somewhat slower. But we're actually moving into products that are actually faster development progress, and that's what we see with like the Optimus, for example. That it's going to take a lot less time for Tesla to win the global Optimus robot space than it took for them to actually win in the overall EV market. So
Okay. I get what you're saying, but you're trying to compare it to Amazon. But I will say that the difference is that this is not just an expansion of the product line like Amazon did. This is brand new markets that are massive. We're talking energy, we're talking bots, we're talking AI, like everything that Tesla gets into. It's like bigger than Amazon, each one of these, not just
yeah.
an extension of the line.
Oh
Okay.
yeah, I
So
100% agree there.
yeah. So Adam Jonas also looks forward and he says, okay, look, earnings per share is going to grow at 27% CAGR through fiscal year 30. $5 per share in 25, $10 per share in 27, $15 per share in 29. And then he says, while it's important to factor in the near-term headwinds in 24, it's also important and reasonable to consider the long-term potential of the products and services being commercialized by the company. You need to look forward. And then
Yep.
they do look at the lower bar. Tesla's operating margins is lower than General Motors right now. 5% type gap operating margins are not something that analysts or investors thought would have happened to Tesla, but they're investing. They're investing heavily in all these massive businesses. That's what happened. And so you got to just take that into consideration. But their strong balance sheet, it's a self-funded business model. There's low risk of equity dilution into a potential hard landing scenario versus the other car companies could basically just die at this point if something bad happened. We believe Tesla's fundamentals can prove more resilient in a more challenging economic scenario versus the competing OEMs. Tesla ended third quarter 23 with $22 billion of cash. We expect to see Tesla competitors significantly pull back in their investments, ceding higher levels of market share to Tesla, particularly outside of China. We remain overweight with $380 price target and a bull and bear case of 550 and 120.
Yeah. So, I think the key to everything that he just said there was the fact that he's looking at time frames that are longer than almost any other analyst on Wall Street is willing to look out to. If he's looking at cash flows in um, 1, 2, 5, and 10 years, then those other analysts just aren't looking that far. And so that's why he's actually having to evaluate the viability of some of these other business opportunities. And when you look at those markets and you realize how big they're going to be and Tesla's position, competitively to take advantage of those markets, that's where a lot of this value that he sees in the stock comes from. And so once again, I just have to give him props for being willing to do what other analysts on Wall Street are not willing to do. Instead of focusing on the near term, the next quarter, maybe the next 2 quarters, cash flows in 2024, be able to look out. I think that's also a signal just of the overall market sentiment turning, that really we've gotten the overall fear has passed its peak fear, and that we're really once again looking out into the future and thinking about how things are going to unfold in the long term instead of what's the worst thing that could possibly happen in the next 12 months.
Love it. Okay. Thank you so much, Hans. I mean, I'm seeing a change, right? We're seeing these investors, the institutional analysts, almost all of them were looking at Tesla as just a car company. And here we are, retail investors going, it's not, it's an energy company. It's, all these other things they can do. Now we're starting to see more and more of these guys. And, this one, he was saying things that I wouldn't even say for 2024.
Mm-hmm.
And so they're starting to see the story. They're starting to think about it and, talk about it. And that's the next step, is more and more of these analysts do that. So that's great news for us. I think it's going to happen as soon as the economy turns, like you were saying, right? Economy turns and everybody's starting to get more optimistic about the future. They look at all these opportunities more, and it's more real. Wonderful. Thank you, Hans. Follow him on his YouTube channel, Hans C. Nelson. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.